Hello, everyone, and welcome to 10x Charting, the podcast where we explore the world of investing and trading. My name is Maria Sharapova, and I'm your host. By my side here is my very special co-host, Scotty Tucker Jr. Scotty's a seasoned trader and investor with over 10 years of extensive experience in the stock market. Scotty's also a senior chartist coach here with us at 10x Charting. Scotty, as always, welcome to the show.
Absolutely. Thanks for having me, Maria. It's always great to be here with you.
So, Scotty, today we're going to be talking about a trading strategy that's gained a lot of popularity in recent years, and that's scalping. Can you explain to our listeners what scalping is exactly and also how it works?
Sure, Maria. Scalping is a trading strategy where traders aim to make small profits on a large number of trades throughout the day. The idea is to take advantage of very small price movements in the market and make a profit on each trade. Scalpers typically hold positions for just a couple or even just a few seconds, and they aim to make a profit of just a few cents per share.
Well, that sounds interesting. So I'm curious, how do scalpers actually identify these small price movements?
Well, Maria, scalpers use a variety of tools and techniques to identify these small price movements. They may use technical analysis, such as chart patterns and indicators, to identify potential entry and exit points. They may also use news and market sentiment to identify potential price movements.
Yeah, that makes perfect sense. So what about some of the advantages of scalping?
Great question. So one of the main advantages of scalping is that it allows traders to make a high volume of trades in a short amount of time. This can lead to more opportunities for profits. Scalping also requires less capital than other trading strategies, as traders are only looking to make small profits on each trade.
There's always pros and cons, right? Which leads me to the risks. Are there any particular risks associated with scalping?
Well, to be honest, there are certainly risks involved with scalping because scalpers are looking to make small profits on each trade. They need to trade frequently to make any significant profits. This can lead to high commission costs and slippage, which can eat into profits. Scalping also requires a lot of discipline and focus, as traders need to be able to make quick decisions and react to market movements in real time.
Well, that's certainly a lot to consider. Thank you so much for sharing your insights on scalping with us, Scotty. Now, before we wrap up, do you have any final thoughts or advice for our listeners who might be interested in trying out scalping?
Absolutely, Maria. My advice to anyone interested in scalping is to start small and focus on developing a strategy that works for you. It's important to have a plan in place and to stick to that plan, even when things get hectic. And remember, scalping isn't for everyone. It requires a lot of discipline and focus, and it's not a strategy that's suitable for all traders.
Wise words, Scotty, as always. Thank you so much for joining us on the show today and sharing your expertise on scalping. And thank you to our listeners for tuning in to 10x Charting. We'll see you next time.